This is Richard Flax at MoneyFarm, talking about this week really the US election. So where are we? As of Friday morning, we still don't have a result. Votes are still being counted, disputes are still being raised, but it looks probable that in the end the Democrats will win the White House, Joe Biden will become president, and the Republicans in all likelihood will hold the Senate, although that will probably only be confirmed now in January after a runoff in the state of Georgia. And the Republicans will dispute, as they already have done. The president has come out and said that the election is being stolen from him, which in fairness is what he said he was going to do. So we shouldn't perhaps be that surprised about that. Perhaps the most surprising part of the week was really the market reaction. Now, it's fair to say that the Republicans did rather better than the polls suggested that they would, but that was also true in 2016. But the start of the week, if you said, well, there's going to be uncertainty, there's going to be dispute, there won't be a clear winner at the end of the week, many people might have said, well, that's a recipe for market volatility and perhaps for some pressure on equity markets in the US. What we've seen, though, is that despite all of that, equities have rallied. And that probably tells us a couple of things. First, short-term trading around elections is not an easy thing to do. Second, when people tell you what is happening in markets, what's driving markets, we should always remember that those are just stories. There isn't certainty around that. There can be good reasons. It could be well argued. But your ability to say with certainty what is happening is actually quite limited. And that should be a valuable reminder that it's not just difficult to forecast markets, it's even difficult to explain them in the present. So, where do we go from here? Well, if it's gridlock, i.e. you have a Democratic president but a Republican Senate, then in all likelihood the ability of the administration to push through significant legislation will be curtailed. Probably won't see the big tax increases that were previously expected, and that's perhaps one argument why you've seen markets rally on news of gridlock over the past couple of days. The second point is that we're going to go back to thinking about fundamentals. What is happening with the coronavirus? We see cases continuing to rise in the US and in Europe. We've seen increased lockdown measures across Europe. And as we've said before, that's likely to have an impact on the economic recovery. The second part is around the fiscal stimulus. First, if you have a split legislature, in all likelihood you won't see quite as big a fiscal stimulus as you would have seen if it had been the so-called Democratic blue wave. But you should expect to see a fiscal stimulus of some sort. The question there is when. Will it happen only after the inauguration of a new president? Or will we see some agreement before the end of the year? In the short term, this actually matters a little bit. You know, the ability of the economy to recover in 2021 is to some extent predicated on seeing fiscal stimulus sooner rather than later. The early rumblings from the Senate are that perhaps Senate Republicans will be more amenable to a deal than they were before the election. But let's see. What seems clear is that we will have a period of uncertainty that could last several more weeks before we do actually finally get a result. For now, at least, that's been taken in stride by financial markets, perhaps digested rather better than we might have expected at the start of the week. But the underlying economic uncertainty around vaccines, around the economic recovery, around fiscal stimulus, all of these are still very much in play. And clearly you can see the downside, but there are also upside scenarios, positive scenarios. If you did see a vaccine come through sooner rather than later, if you did see a fiscal stimulus passed, all of these are possible. And those are the sort of things that people will look to, we think, as they think about the market environment for the end of the year and going into 2021. Thank you very much for joining us, and look forward to speaking to you again soon.